Hi there guys, I just made you a quick video just doing revision for Debtors Reconciliation. Like we learned in grade 9 already, Debtors Reconciliation is when the balance of my debtors control account is the same as the total of my debtors list. Remember, your debtors control is a summary of all the journals affecting debtors, where a debtors list is a summary of all the debtors ledgers accounts added together to give us our total for the debtors list. Let's just quickly go through our debtors control account again. Remember, debtors control is an asset because we sell products to a client and it is sold on credit, it's not cash, so this debtor still owes me the money, this being an asset. Debtors control will then increase on my debit side and decrease on my credit side. We will have our balance on our debit side, and when we sell to a client, our debtors control will increase on our debit side. Sales, debtors journal. If the client is not satisfied with the product, they can return the product and we will give them a credit note, and this will then be recorded in my debtors allowance journal. This will decrease the money the debtor owes us. Then you'll see I've put in here petty cash as well, petty cash journal, because sometimes we pay on behalf of the debtor for transferring the products to the client's house. Then we will just add the money that they owe us. We'll add to it. It will happen that, or it must happen, that our debtors must pay us. Then we'll have on our credit side bank and discount allowed. Please ensure that this is one entry. Just once we're going to enter this bank and discount allowed on my cash receipts journal. And remember, when we do our debtors ledger, that we will have this separately. Look at number 4. Here we're going to split it. Here it's going to be duplicate receipt and discount allowed separately. But when we do this entry in my debtors control, it's one entry. Then sometimes the bank, on our bank statement, it will say that there was something wrong with the check and the check didn't come through. So then we will have in our cash payment journal an entry. We will have bank cash payment journal. This is for an RD check. Remember, RD stands for refer to draw. Now we have to add again to the amount that he owes us. When he paid us the check, we made debtors control, we decreased it, but the check, there was something wrong with the check. Now we have to increase it again. Remember now that the amount we put in our CPJ will only be the cash amount. We will still have to cancel the discount that he received, and this discount will be cancelled in my general journal. The entry for my general journal in my ledger accounts will be sundry accounts. You can also say journal debit. And then there can be in my debtors control on my credit side sundry accounts, general journal, and this can also say general journal credit. Then we will have our balance carried over, and on the 1st of the next month, balance brought down. Now, doing the reconciliation, we know that this balance must be the same as the total of my debtors list. Remember, the debtors list, as I said before, is a summary of my debtors ledger. Remember now how a debtors ledger looks. A debtors ledger is for each individual debtor, will have their own ledger, and all the transactions that they did through the month will be entered in my ledger. We've got here debtors ledger. I just choose Jenna, and transactions that we will see in the debtors ledger will be as follows. Remember, in details, we will always have our source documents. In our folio, we will have our journal. Then, in my reconciliation, in my debtors ledger, debits always plus, and credit's always minus, and this will then affect my balance accordingly. So in the beginning I will have account rendered, you can also say balance. Then when we have issued an invoice, it's sales. Let me just put in there for you as well, it's sales. My debtors ledger will increase, which means my balance will increase as well. When there's something wrong with the merchandise, the debtor will return it and we will give them a credit note. When we fill in the credit note, it has to be for my debtors allowance journal, and this will have a decrease on my ledger account, which means my balance will also decrease. When a debtor comes to pay the amount that he owes us, we will have a duplicate receipt, which will decrease my debtors ledger, my balance of my debtors ledger. Remember, it's always a duplicate receipt, and this will be shown in my cash receipt journal. And then separately discount allowed from my cash receipts journal, and this will also decrease my balance for my debtors ledger. Then, as I've put in the example for my debtors control account, it is possible to have a petty cash voucher in here, and mostly it is when I pay on behalf of a debtor for transfer costs. Then when there's something wrong with the check was not accepted by the bank, we have to cancel the check. This check will then be cancelled in my cash payments journal, which will increase my debtors ledger. Remember, bank statement will then be my source document. My journal will be cash payment journal, and only the cash part can be cancelled in my cash payment journal. The discount must be cancelled in my general journal. Then at the end of the day, the balance for Gina will be transferred to the debtors list for debtors list next to Gina, and this will happen for all of my debtors. At the end of the day, when I add all my debtors balances, it will give me the total for my debtors list. If you look carefully, you'll see here's all my journal entries as well as in my ledger, and therefore the amount of my debtors list and the balance of my debtors control must be the same. This is what we call a debtors reconciliation. The debtors control is reconciled with my debtors list. Let's just quickly look at the following. Debtors reconciliation is used to correct differences between the debtors control account. Remember, it's the T1 and my debtors list. My debtors list is a summary of my debtors ledgers, which has my debit, credit, and balance. Okay, so how are we going to do this? We're going to check the entries in the journals against the source documents. This must be the same. We are also going to check the casting. Casting is another word for the totaling, the total of the journals. And we're going to check the posting from my journals to my general ledger and to the debtors ledger. Remember, each time when we make an entry in a journal, it will go to the debtors ledger immediately, and then at the end of the day, my general ledger will also, my journals will also be posted to my general ledger. In the reconciliation, we will have to determine where the error or omission occurred. Was the error or omission in my debtors control account? Remember, this is when my journals will be affected. I just want to say, etc. Or my debtors list is affected. Remember, when I talk about my debtors list, it is a summary of my debtors ledger. And this one is my debtors ledger. Debtors list, a summary of all my debtors ledgers. It is possible that the error or omission can be in both. In the next video, we're going to do an example just to show you what I mean.